What's going on, guys? Patrick here from PatrickLawrenRealty.com, and today we're going to go over one of my favorite ways of leveraging your property and using a HELOC, and we're going to go over all the details of how it works and how you can properly leverage that to really build your real estate portfolio and have all of this cash that you can use for investments, for purchasing other properties, and what have you. So stick around to get all the details. See you on the other side. All right, guys, so in this chapter, we're going to discuss HELOCs. Now, HELOCs, generally speaking, is basically you leveraging your property when it has equity and being able to pull out a line of credit. So basically allowing you to leverage your property to basically have a credit card that you can use on whatever you'd like. It's a lot to swallow, so let's jump on my iPad to kind of break down the numbers to really wrap your mind around this concept of a HELOC or a home equity line of credit. Okay, guys, so I know that we're looking at a lot here, but I'm going to break it down so it makes it a little bit easier for you guys to understand. So we're discussing HELOCs, okay, our home equity line of credit. So let's put this in an example. Let's say you find a single family home for $600,000, and maybe you get a loan on it for 20%. So your loan is $480,000, okay? Then you go ahead and renovate the place. Maybe you throw 30 or 50 grand in it. Then you get it reappraised, and now it's actually worth $800,000, which is absolutely amazing. So you basically have built in, if we take out the $480,000, $320,000 of equity, which is absolutely amazing. Now let's see how this HELOC comes into play. Now a HELOC is basically you allowing to basically have a credit card that you can use at your will. Now, of course, I highly suggest that you only use them for investments, not like buying a boat or something, but investment like buying a house or using that money to use it for a down payment or doing renovations or something of that nature. So let's say, normally HELOCs, they'll give you about 89.9% of what your home is now appraised at, minus of course what your loan is. So let's say your house is now worth $800,000, 89.9% would come out to $719,000, minus the $480 of the loan. That gives you $239,000 of basically credit that you can use on whatever you'd like. And this is absolutely amazing. You basically have just built a credit card that gives you the ability to spend it on whatever you like, most importantly on investments or purchasing more property just from simply renovating the place. And you didn't have to sell the place and cash out and get hit with capital gains. And this is the power of real estate and being able to properly leverage it. So let's dig a little bit deeper. Okay, now you have this $239,000, okay? Now, the cool part about this is that if you don't spend any of that money, opposed to like having a loan where you're getting hit with, interest and principal every single month with a mortgage payment, if you don't spend any money, you don't owe any money in regards to interest. I mean, you might have to pay a $100 annual fee, but I mean, that's it for you being able to control $239,000. Now, with that being said, you can take that out, and usually, on average, the HELOC is about, probably about 6%. So it's 6% to borrow this money. So yeah, I mean, you do have to pay interest. You are using somewhat of a loan, but it's really just a line of credit, and credit cards are about the same interest rates either way, but you can control now $239,000 of money, and you can use at your will. So let's say you need 100 grand, you got 100K, that you need to use for a down payment. You pay 6% on that. It's usually about 10-year loans, and it's interest only, by the way, which is absolutely amazing. So you're basically paying $6 grand a year to borrow 100 grand, which is absolutely amazing. You can use that, you can pay it off as much as you like, and you can leverage this 100 grand to go purchase another property. And this is the absolute beauty of a HELOC and being able to properly leverage your real estate property without having to sell it, use capital gains and things of that nature, or pay realtor fees to sell the place. You can actually leverage that property to purchase another property, and then you can even get another HELOC if you'd like. And this is the beauty of real estate and leveraging it properly. So that's a HELOC. So as you guys saw, there is a lot of power in the HELOC and things you can use and do with it, whether it's renovating your property or renovating another property or putting a down payment. But it's really important that you don't over leverage your debt and get yourself in a sticky situation and use that HELOC to buy a boat or something that's really not going to have a return on your investment. I highly suggest that if you do have a property, or in the future, if you're looking to leverage that property, you kind of explore it using a HELOC. Anyways, that pretty much wraps it up. Anyways, guys, that pretty much wraps it up. If you could do me a huge favor, if you got any value out of this, smash that like button and comment down below what you think about using a HELOC, or if you've used a HELOC in the past. I'd love to hear what you guys have to say. And you guys have a beautiful day. Again, I'm Patrick with PatrickLawrenRealty.com, powered by eXp Realty, and I'll talk to you soon. Aloha.